All right, well, we got to talk what's going on here, specifically as it relates to China. President Trump this week issuing an executive order banning transactions with 8 Chinese-owned apps. The president saying these apps can access personal data of Americans and potentially track the locations of federal employees and contractors. Included in the executive order, which would take effect in 45 days, is the Alipay payment platform owned by Jack Ma's Ant Group, as well as Tencent-owned apps like QQ, QQ Wallet, and WeChat Pay. For more on this, we're joined by Howard Yu, Lego Professor of Management and Innovation at IMD Business School in Switzerland. Howard, it's good to see you this morning. He's also the author of Leap: How to Thrive in a World Where Everything Can Be Copied. Howard, when the Trump administration, initially went after Tencent and WeChat, U.S. companies that do business with China, like Apple, Walmart, and Disney, they all objected. So can we expect a similar response this time from American businesses?
No doubt, because what happened is this time the ban in terms of the scope is even broader. It's going to hit or having a bad impact for all these American brands, whether it's General Motors, Procter & Gamble, Nike, and Starbucks. If you are an American company trying to do business in China, and if you're not able to getting onto either of these two platforms owned by Tencent or Alibaba, it's almost impossible these days. And so this is quite a reckless and ad hoc move by the administration that you are trying to ban all the activities of companies from America doing business in China all at a sudden. And this is why I think a lot of confusion is going on right now.
And the big question, of course, as we're less than 2 weeks away from Joe Biden's inauguration, taking the Oval Office, is what his tone and response will be to the harsh rhetoric that we've heard from President Trump on China. There have been reports that Biden is expected to remain tough on China, but perhaps not as hostile. Do you anticipate that this is going to change just 2 weeks from now?
I think you're right, Kristen. I mean, the overtone is going to stay the same, more or less, because it is, after all, a bipartisan stand of thinking about trade war and tech war and all of this strategic rivalry. But what will change, I think, is any potential ban would go through much more of a systemic consultation, policy consideration with timetable clearly laid out. So it would be much less of an ad hoc intervention here and there, and no one know what exactly is the outcome. But instead would be much more of an open, transparent, rules of law type of administration going forward.
And explain what's going on in China right now as well. I think some investors and Americans were a bit surprised to see that Chinese regulators are now looking into their most profitable, biggest companies like Alibaba and JD.com, for instance. What's the story there?
That's interesting because at IMD Business School, we always track the most innovative companies and what kind of new practices that they bring in. And Alibaba and Tencent and JD.com, no doubt, systemically, they always top in terms of global innovation, in terms of practices. Now, in China, historically, what you see is the government would always support their national champion. But all of a sudden, we kind of see a reversal in terms of tone. I think fundamentally it's this. There are national champions that are having a big position abroad. Think about Huawei, Lenovo, even TikTok. They are the ones who are bringing foreign money, bringing profit back to home. But if you think about these tech giants, whether it's JD, Alibaba, or Tencent, majority of the revenue and sales and profit are actually generated from home, domestically, inside China, while disrupting a host of industry. So this is when the disjoint happens. If you're disrupting all the industry, if you're disrupting all the state-owned enterprise without bringing much of a foreign profit back home, then in fact you could be in a tough spot. So huge implication in terms of how these tech giants would develop their business going forward.
Howard, how do you think that China, Hong Kong, other international powerhouses look at the U.S. after what happened yesterday in Washington?
I think something already occurred. When I am in Switzerland talking to executives over the last 6 weeks or so, they're all thinking it's so important to think for yourself. And right now, what you're seeing is Europe signing a deal with China for investment agreement just ahead of the Biden administration. And so whether it's Asia or Europe, I hear a lot of this rhetoric. Yeah, it's probably going to be more stabilized, but there is still so much uncertainty going forward. So instead of just relying on U.S. leadership all this open economy around the world would continue to think for themselves. So the sort of global strategic alliances may not be as easy as we initially thought so.
And I wonder if that has more to do or has anything to do with the American electorate versus, per se, just the leader of the free country that's elected every 4 years. What do you think?
One part is no doubt is that, but also every government in the end, they are accountable for their own country, accountable for their own citizens. So despite there are certain consistency or value system that open democracy would be strategically should be aligned. But in the end, there are so much consideration that whether it's Germany or Switzerland or France, they need to be held accountable, whether it's employment, export, etc. These would actually be major consideration whether they would stop doing business with China or continue to forge a closer partnership going forward, despite the politics as a backdrop.
Howard, we got to leave it there. I wish we had more time. It's always good to see you. That's Howard Yu, Lego Professor of Management and Innovation at IMD Business School in Switzerland. He's also the author of Leap: How to Thrive in a World Where Everything Can Be Copied.